Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you all having a fantastic day today. In today's video, we are doing a comprehensive macro and short-term analysis discussing the total cryptocurrency market cap, the total altcoin market cap, Bitcoin's macro and short-term price action, and absolutely everything you need to know about the 4-year cycle and the rest of the market. So we're going to be discussing potential top dates. We are going to be discussing potential targets. We are also going to be discussing potential rejection points and warning zones. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment in the free channel. You'll get access to trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and a variety of different group chats, from the general chat to the trading chart education chat to the news, the help, the trade setup, the community trader setup chat, the help chat, and of course our coding chat. Check it out, guys. To join up, click the pinned comment of the free channel by contacting our admin. You can also check out our trading track record or a 10-minute video showing you inside the channel. Now, one more thing before we get into it, I do want to extend a big thank you to everyone who commented on our video yesterday. As you know, I have been very sick for the last few days. I'm only slightly getting to the point now where I can actually get here and talk for 20-30 minutes and do a video. I'm still struggling a little bit, but I do want to get this content out for you guys because it is very important. So a big thank you to everyone. I do very much appreciate it. Let's go ahead and jump into it. Starting on the market data, 24-hour volume and liquidations, as we can see, a bit of a surge toward the upside with volume up 13%, 444 billion. Liquidations up a whopping 30%, 538 million over here. So a fair amount of liquidations occurring. If we jump over to our liquidation heat map over here, we can see a lot of that actually coming from Ethereum. So we do have a lot of volatility here on the Ethereum price chart over here. As you can see over the last few days, massive move toward the upside. In the last few hours even, we're seeing a lot of large wicks on the hourly. And even if we go down to a 5-minute chart just to measure some of these moves, right, on the short term, looking at the percentage gain and loss from these swings, we're looking at 3, sometimes even, 2 to 3% moves in a matter of, 30 minutes. So fantastic scalp trading environments. But again, with this massive amount of volatility and volume, we do see a lot of liquidations, of course. Moving over to the DXY, not too much of a change over here. The DXY is slowly trickling upwards to 98 over here. Again, our macro expectations are still going to be towards this 92 to 93 region. Depending on what happens to interest rates will massively influence whether or not we see this come down into this region and how quickly that occurs. As we know, the macro expectation for interest rates is bullish, and that is why we've seen the market rally aggressively over the course of the last, let's say, 22 months over here, 24 months over here, is because it's the anticipation of this mechanism that results in the market going up. It's the understanding that reducing interest rates has a long-term positive impact on the risk asset market through the mechanism of the dollar decreasing in value relative to assets, resulting in debt to service ratios decreasing, facilitating not only more spending, but of course more acquisition of debt, but cheaper debt, as the debt to service ratio, so the amount of money it takes to service that debt, decreases. That facilitates companies to acquire risk assets, particularly income producing assets, at cheaper debt to service ratios, which produces income. They use that interest income to then buy more assets, and that cycle goes on and on and on, and we see this over leveraged effect which pushes the markets up. So this mechanism has barely even started yet. Now, here's the amazing thing at the market. The market doesn't necessarily care that this hasn't started, it cares that it is going to happen. So the market massively front runs this, it moves in anticipation of this mechanism playing out. And that is exactly why if we look at the weekly chart for Bitcoin, even the S&P 500, and we take a look at when this was really in discussion, it was back over here in September 2023, October 2023, when interest rate reductions became a realistic expectation. Ever since then, the market has aggressively rallied. So there is a theory, and this is a theory, that when interest rates finally do come down aggressively, we might see a bit of a correction in the market as a buy a rumor, sell the news event. But if they do come down for an extended period of time, we would expect eventually the uptrend to resume again. So moving over to the S&P 500, some good news here for the S&P 500. We have managed to absorb the short-term selling pressure and weakness. We've broken back through this local high at 6,333. This level now turns into a level of support, therefore expecting continuation 6,400, potentially a little bit higher, provided we remain above this horizontal level. If we drop back below here, this is now deviation. We expect a correction. While we remain above, we are expecting 6,400 and higher. So that is some good news at S&P. Let's jump into Bitcoin, guys. Before we do jump into Bitcoin, make sure to go ahead and sign up to BitGet, BitUnix, and BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content for you on a daily basis. And of course, be trading on exchanges I use and I trust. Go ahead and check it out. We'll play an ad and we'll get right back into the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump back into it. Starting on the total altcoin market cap, we have seen a fantastic rally toward the upside following the breakout of 940 billion. This breakout occurred 5 days ago, and since then we have seen a massive rally right into the next resistance at 1.03 to 1.05 trillion. With that, we can see on the cryptocurrency market cap, the 7-day return for a lot of altcoins have been well above the 20 into the 50% region. So a fantastic rally for the altcoin market. Of course, some altcoins massively overperforming, some altcoins massively underperforming. That has been the tune of this cycle so far. There are thousands and thousands more altcoins in this cycle than there has been even in the last cycle, and even thousands more in the prior cycle. So we have seen now in this cycle a cycle of rotation, as there is more money, marginally more money, spread across significantly more potential places. So we don't see a similar reaction to what we saw in 2021 or even 2017, where everything goes up. We see select coins rotating very, very well, some coins performing mediocre and some coins underperforming, to see a constant rotation. But when we're looking at the total altcoin market cap, it's a pretty good indication of what is expected on average for the altcoin market going forward. And at the moment, we are now approaching essentially the first level of resistance here since the breakout of 940. So we are potentially looking for rejections, potential pullbacks for altcoins, and we wouldn't be surprised if we did see the altcoin market pull back a little bit from here. If we want to see the altcoin market commence the next leg upwards, well, that would begin upon the breakout of that $1.06 trillion level. If we can break through 1.06 trillion, it is very likely we see macro continuations upwards into brand new highs for the altcoin market. And the percentage returns we saw here for the altcoin on average would be nothing compared to what we could potentially see if we break through this resistance. So there is a good potential we see a bright future here for the altcoin market, but for us to have that, we need to break through 1.06. So fantastic rally. Congratulations to everyone who capitalized on that. We are now approaching resistance. And if we break through this resistance, we will very likely see continuations. But of course, resistance is resistance until it is not. And therefore, the potential for short-term pullbacks do arise from this point onwards. Let's jump over to the total cryptocurrency market cap. The total cryptocurrency market cap, guys, 3 days time. That is when we have the week close. And that is really the most important thing we are watching for the total cryptocurrency market. Now, the reason we are watching that is because we want to see not only a weekly candle close above this prior level of resistance, but we want to see that weekly RSI breakout, which will confirm a positive momentum shift, indicating to us that the buyers are fully in control here. There is no weakness on this breakout, and they are ready to push the price upwards even more. Now, if we see that happen, the potential for the break of 106 over here on the total altcoin market cap dramatically increases. And the potential for the rest of the market for Bitcoin to continue upwards as well dramatically increases. So if there's one level we're really watching here, it is going to be that weekly close in 3 days time for the total altcoin market cap. So check that out and pay attention to it. Let's jump over to Bitcoin now. So for Bitcoin, we are watching 2 very important levels on the weekly chart. Number one, similar to the weekly RSI on the total cryptocurrency market, we are as well watching the weekly RSI on the Bitcoin weekly chart. The reason being, again, is because we are watching for a positive momentum shift here, which would dramatically increase the likelihood for a directional continuation higher toward the upside. Now, the big question is, what is the potential target if we were to see that weekly RSI break upwards? And the answer to that is, the target is very speculative. The reason being is we do not have any historical price action above where we currently are. We are in literally price discovery. So when we're using potential targets in price discovery, it is going to be more speculative, and we need to look from 2 different perspectives. Number one, we can look at different potential levels of resistance based on prior diagonal trend lines or even psychological levels. Or number 2, we could look at potential top dates based on cyclical theory and then extrapolate based on the direction of the price action and angle of the price action where that price would generally be sitting within a range by those particular dates if they were to come. So let's do all of that and then jump over to the short term. So on the higher time frame, there is a few ways we can potentially target macro targets. Number one, we can assume if we do see a weekly RSI breakout, looking at these prior resistance points, they respect this uptrending resistance. If we were to break through this trend line, it is likely we rally back up to retest this uptrending resistance. Where would that put us? That would put us somewhere between 130 to 135,000. If we now were to factor in the potential top dates, which span between the first week of August to the 6th of October based on the 4-year cycle theory, which we'll discuss in a second, that extends the potential top date price targets to 136,000 to 144,000. Now, will these be the top prices? It is impossible to say for sure. We can only tell as they are reached and slightly in hindsight, as we do not have any price discovery up here. But would they be logical points where rejections could occur if reached? Absolutely. Again, we are cross-checking this with date range trends based on the 4-year cycle theory, which we'll discuss in a second, and actual realistic true standing long-term diagonal trends represented by not only the uptrend from these prior highs, but confirmed by the RSI indicating momentum. So these would be potential targets. If we are looking at psychological levels, we have also got our whole numbers of 120, which we have actually broken, 130 and 140,000. Particularly 140,000 would actually come within that range, making it the most realistic psychological target if a rejection were to occur. So, provided we see the weekly RSI positive shift, provided we see the weekly RSI positive shift here on the total crypto market cap, we do have potential targets here that could extend into as high as 140,000 by these potential dates. Now, what is the likelihood we see this? At the moment, I would say it's more likely than not, but we need to see this positive momentum shift to really drive it home. Now, when would all of this fall apart? When would these targets become no longer expected? When would an early top be formed? We'll discuss that when we get to our short term in just a second. But overall, guys, this is a very important analysis, and whether or not these become the tops is not really the point. The point is to identify levels in this price discovery where we have no historical context of how the price will behave that could act as critical levels of resistance. And that gives you a step above. It gives you the leg up among the rest of the market participants who are blindly trading into the zone, because at least now we have some key levels. I've identified some important points on the chart where tops may occur from. If we were to take the overall direction of the trend, so we take the angle of the trend, let's go ahead and do this very quickly with the trend angle. We take the trend angle from the bottom of the trend that has been developed, bring that through the trend which we've retested. We can see now, based on the top dates, the minimum and maximum targets as well based on the trend angle. So looking at the trend angle, the minimum target will be 112,000 by the August 5th, or the start of August, which we're very ticked off, so that is now irrelevant. And then the maximum target, assuming the trend is retested by October 6th, which is the 4-year cycle top, would be 132,000. So we've already gone ahead and now identified a small range of targets between 132,000 and the psychological level at 140,000 being the most realistic, and then a blow off top kind of top being 144,000 based on the uptrend. So already, just by looking at the context of the cycle and looking at simple trends, whether it be long-standing trends or the angle of the direction of the price action, we can infer critical levels on the chart where reactionary price action may occur, and that may very well be the top, or it may not. It is still up to speculation, but nevertheless, it gives you a leg up on blindly moving into this price action. 4-year cycle, and then we'll jump into the short term. This is very important what is happening here. 4-year cycle, as we know, guys, may or may not play out perfectly, meaning it may work out. We may see the 4-year cycle top, or we may invalidate the 4-year cycle and continue upwards beyond the 4-year cycle. And that is it for the 4-year cycle, done and dusted, no one speaks about it again. Very, very real potential. But when we're looking at these targets, they are going to be based on the 4-year cycle, of course, okay? So we could see this rejection, 4-year cycles played out perfectly, and then we just continue upwards, and all of a sudden the 4-year cycle is broken forever, and no one talks about it again. Very real potential, something that could definitely happen, particularly with how interest rates may come down in the future over here. So looking at the 4-year cycle, nevertheless, the 4-year cycle here should not be used to blindly sell everything and just be like, okay, this is a top, it's all over, we're going down indefinitely for a year. More so, it's to give you context, okay, to the unknown. That's what it's for. It's to give you context to the unknown, and the unknown is this, the price discovery region. It's to give you tools to essentially help you identify levels of reactionary price action where you may want to react to what is happening, okay? So you do not blindly go into the void up here and just hope for the best and hope that, you know, oh, it's in God's hands and my trades are just, you know, up to fate. You don't want to be acting like that. You want to have some agency over your decisions. Remember, if you do not act in the market, eventually you're going to be forced to act. And if you're forced to act, generally, You're going to be acting from a position of desperation and weakness. It is better to make decisions, even if they are sometimes the wrong decisions, than to be forced into those decisions without choice, okay? That is a very important thing to understand. Agency is important when it comes to trading. So when we're looking at this for your cycle tops, negative 2 bar theory, look in August, okay? Traditional top, looking October. Very, very short range between the two of those, but those are nevertheless going to be important points to be watching for reactionary moves in the price. Let's now talk about, and it's all very well and good talking about, these tops and everything will go up and, the altcoin market's going to go up and everything. It's great talking about that, but let's also talk about, what are the risk factors to this? Could this fall apart? Could we see rejections? What would happen if we saw this reject? What would happen if we saw the altcoin market reject? Where does that leave the market standing? I think a lot of that comes back to Bitcoin over here. And if we take a look at Bitcoin again, for us to fail to break through the weekly RSI for both Bitcoin and for us to fail to sustain above the weekly RSI on the total cryptocurrency market cap, with Bitcoin being the largest, percentage share of the market, where Bitcoin goes massively impacts where the rest of his markets go. So if we were to break below 115k, this horizontal support, our sell side liquidity, we see the entrance into our low historical resistance range on the VRPV. What does this mean? It means we'll see a flash correction to 111, okay? If we see the flash correction to 111 and we zoom out very slightly here to a 4-hourly chart, we can also see, well, that uptrend we've been in since 23rd of June has been broken. The bears are in control. But until then, we are safe. Until that happens, the weekly will likely turn bullish over here. In terms of RSI, we will likely see the weekly on the total remain bullish, and we will likely see the altcoin market continue upwards. Until that happens, we are safe. If we do see that happen, we are in a lot of trouble for corrections. In terms of Bitcoin itself, when does Bitcoin go to new highs again? When we need to break through its resistance. You can see we've just attempted to do so today, but we have failed to break through. We need to see that level sustain above. If we do, we likely come back to retest. If we don't, well, then we run the risk of coming back to retest these lows. That is it for today, guys. Have a fantastic day. That's about all my voice can take. I hope you have a fantastic rest of your day, and I'll catch you guys on Sunday. See you then.